TGIF, everybody. How's everyone doing? Good morning, Brock. All I could say is this. ForexAnalytix rocks. Put on your seatbelt because we will rock you. Who agrees? Who was short the dollar? Pick your poison. Who was short the dollar this week? You know, we talked about it all week. Yeah, Steve. I took about a bottle of Cialis last night. Anyway, okay. Enough of my hijinks, right? So we were talking about the Swiss. You know, I said it was, you know, just a mess, but I liked Greg had this as a pip. He's still looking for lower numbers. You're going to have to subscribe to see his target. So you could at least, I'll give you a hint. This is not it. So you could at least try this, right? For $1. I'm sending out refunds if you don't like it. And I'm going to do it the way my Trading Warrior brother Ziggy does it, postage due. So do it. So, you know, Friday is a day that it's book squaring, and unless there's an NFP, but you have to say that the dollar has made a very dramatic move to the downside. It was first led by cable, then Euro caught on. That's a pretty ugly chart. I know some people that are looking for 96, 95. I have a speed line that'll come in at 94. There's
70,
nothing, huh?
70, 60.
Oh, that. No, I think there's some people, Steve.
No, I'm not kidding.
I know you're not.
Just long-term targets.
Yeah, you know what? A guy that I've become friends with has had that target for a few years. Peter Goodburn. So you know, he's looking for that. So here's your monthly. So I mean, the bears are saying, you know, these lows will be taken out, that this was just a big bear market rally with 120 back here. I guess I don't go back that far being the high. But there are
yeah,
still
if you look at the historical chart of the DXY, there is absolutely no doubting that we are in a long-term downtrend.
Yeah. There just are a few bulls that are looking for a pullback here, and then you know, an explosion in the dollar. So, but I mean, you know, we're going to go with the flow until we get there. I mean, we'll know if there's going to be some type of rally. Anyway, that's a very ugly month as well. Okay, so we still have a couple of weeks left. Halloween is, as Blake said, I'll be eating a lot of peanut butter cups and not answering my door, staring out the window, and drive the kids crazy. Anyway, ugly dollar. The only other thing I really want to cover. Oh, and we fired Stelios Contos today for not making the webinar. So I'm going to be doing macro now. Anyway, what's the yen waiting for, Steve? I mean, 108, 108.50. You know, I mean, when breakouts are real, do you get a candle like this and then, you know, the market says, okay, you didn't react to what was significant. We're going to give you, I don't know, 1 day, 2 days,
Listen,
maybe
I
3
really
days.
don't know. I really don't know what to tell you. I've quit even attempting to try to trade again for some time now, because sometimes it follows risk, sometimes it follows yield, sometimes it does nothing even when both are moving. So I don't know. The way this market has been moving since a long time ago doesn't look normal to me. So I want nothing to do with it. You know what I mean?
What is normal in the new normal, my friend?
Yeah, that's a
Anyway,
good question.
so anyway, this 108.50 level here, and Blake brought it up yesterday, that people got squeezed here, and I'm sure there are people that are long. But I'll tell you what, if we start taking out 50, I'd be pretty careful there. Even though Aussie, the commodity currencies, had a great week. Looks like some type of breakout. Maybe this was a head and shoulders or ascending triangle. This doesn't look done to me. Just let's call it 67. Yeah, we should have 69. Maybe back to the 200-day moving. So it's not over. And really, you could almost say we didn't get confirmation until yesterday. Okay, you could have said, yeah, this is a low, it's diverging, it was a weakness, it couldn't rally when the dollar was weakening, and then boom. So that's where I think that's going. I think that's really about it. I can't get a handle on the metals right now. I know what I want to do, but I mean, look at this. So, I mean, it's a decent scalping market both ways, but I don't have a feel for a position at this point. I'm bullish, but I still think I could get these buy metals cheaper. And I tried the S&P yesterday, and we had a decent little break from here, a little 2 drive. This kind of looks like a 3 drive, but on the third, I was looking for one more, maybe up to the line. We didn't get it. And I'm just taking a shot here today that maybe people don't want to go home long. Let's see if it's changed. I mean, people always wanted to go home long S&Ps over the weekend. Let's see if they want to today. Back under 90 is going to be the first sign that there's at least a correction coming, maybe back down to 29.60 or so. It's done nothing wrong on the daily. It's done nothing wrong on the weekly. So we'll see. I think we'll know by Tuesday whether this is going to just be, the week, nice up week, another failure to make new highs, or just blow through them already. So just taking another shot today. Probe and protect. That's what we teach here. You probe the market and you protect yourself, because you never know whether a move is going to be from a low or the low, or a high or the high. But this one, we were pretty much on target. So we saw the dollar at the top, a 3rd drive. Maybe it was an ending diagonal if you're an Elliottian, but decisive down week in the dollar. So you have to sell rips. And Blake, you were on top of this on dollar weakness, and I'm guessing you had a decent week.
You know what? Actually, I didn't have a decent week. I got caught. I gave back a little bit of my profits this week. I was long some Euro New Zealand. I picked the wrong horse. And
Okay.
sometimes you do that. You have an idea and you don't necessarily pick the right horse, if you will.
I've done that. I bearish or bullish a dollar, and I picked the wrong instrument.
Right. Yeah. And so I was long some Euro New Zealand. I knew the euro was going to be strong. I didn't think the New Zealand dollar was going to be as strong as it was.
Blake, let me ask you this: do you know who this guy is on my T-shirt right here? He's one of my favorite guitarists.
It's so small. Let me see. Oh, that's Forex Live. So that's got to be Sid Vicious, right?
That's Mario Draghi, who was just inducted into the Central Bankers Rock and Roll Hall of Fame. For playing the market like a virtuoso lead guitarist, like Jimmy Page.
That's cool. I have a Forex Live shirt, but mine's just it just has the logo up top. It's not a cool one like yours. I'd actually wear yours all the time.
Yeah, I do. So
that's awesome.
From our trading warrior brother Adam Button. Anyway,
that's cool. That's
okay,
cool.
bro.
All right. Well, I don't see you wearing any Forex Analytics.
Every day I wear. Those are my pajamas.
You know, it's funny. It's funny you say that. They honestly, I
So
wear.
comfortable.
They are the most comfortable T-shirts I've ever owned, and one of the guys that I trade for, Ronnie Schlapfer, who we brought in here as a year ago or so.
Yeah.
I gave him he requested that he had I think I gave him 5 of them because he wanted to wear them every night to bed.
Yeah.
And he's like,
I'm starting to get some holes in mine.
oh shoot,
Just as I let you know.
All right, well, you know,
The moths have got.
Good news is I've got a few hanging around. The problem is we're running low on inventory, and I severed relationship with the previous vendor because like his
billing.
No, his attitude.
Okay.
So, fired him.
Yeah. He's not the only one.
Yeah, well, no, that's not true. But anyway. But the good news is
I mean the only one to make them.
Oh yes, exactly. There's plenty of shirt makers out there. I just I know what shirts they are, and it's like fine, deal with somebody else. Those guys are a dime a dozen. So anyway, but today is a day where you're right. It's Friday and it's kind of slow. But let's talk about some market stuff. So I tweeted a little bit about the euro, just kind of just kind of playing with the market. I tend to do that. You guys maybe don't know this and I should probably explain to you. I tweet a lot to gauge interest and to see where the retail market is. I have a lot of followers on Twitter. I do, and they're organic. I've been tweeting for 10 years now. I had my 10-year anniversary, I think, this year. I think I got an email from Twitter at some point, and I've tweeted a lot. I don't know how many tweets I have. I've tweeted probably 70, 80,000 tweets, and I've got like maybe 50,000 followers or something like that. And it's all organic. People followed, unfollowed me over the years. I've never paid for any followers. I just tweet information. You follow me if you like me. If you like what I have to say, if you don't, you unfollow. It's whatever it is what it is. But I have a lot of retail traders that follow me. I know the institutional traders follow me as well, but institutional traders don't like, retweet, or anything that I do. I know that because I've known so many. I've met so many over the years that are like, oh yeah, I follow you on Twitter, and I don't know who they are, and they don't tweet at me. They don't tweet. They follow me from an account which they just use to monitor people. Monitor different market people. So they never interact with me. The retail market does, and which is cool. I respond to a lot of people. They hey, are you long this? Oh, how do you feel about that? Or and they like or retweet. But usually I can gauge sentiment pretty well based on how many retweets or likes that I have on an idea. So if I tweet that, like for example, this morning I said the euro's pushing up against 111.50, how many stops are above there or something like that, and how many stops are above 112, and how many stops. When I get very limited reaction, it usually tells me that the retail market is short. So
just save one t-shirt, because Jervin Bassa said he'll sign up for a yearly subscription for ForexAnalytix.
Oh
t-shirt.
Crap, I'll send you a t-shirt.
You have to sign up first.
Yeah, it signs up. Send Dale a message, and I'll send you a t-shirt.
Yeah, you got it, buddy.
Yeah, and no problem. I'm almost out of mediums. That's the problem. I have a lot of extra larges. So good news is me and you.
I'm eating a lot.
Us big Americans. But then I sent all the medium ones to Steve. He's a little shrimpy European guy, so I had to send him all the other. Just kidding, Steve.
So, bottom line, our friend here has to gain some weight. Right?
No, well, the problem is I think Steve went up like 2 shirt sizes the last 3 years or so. So that's what happens in your 30s, right, Steve? You know, you just.
Oh yeah.
And
Yeah.
I'm telling
Steve,
you.
can you rest your tray on your shelf, your stomach? That kind of, I'm getting a little shelf where it kind of has an indentation.
Oh yeah,
to put my
he
TV
puts his
tray on.
coffee mug on his stomach in the morning. You know.
Not yet, guys, but I'm working on it.
You know what? You know what's funny? Okay, I got to really talk about the markets here, but
Yeah.
but I do. You laugh about that. I noticed in my 30s, I'm like, I'd look down and I'm like, oh look, I can actually stick my coffee mug right there. That's interesting. That was never there before. In my 20s, it was like a washboard. Now it's like, oh, look at that. I can.
Yeah, it's
I
like
can actually,
a piece of organic furniture.
Oh, I'm going to put my licorice on there. Oh, that's awesome. Okay, sorry. I digress. Let's get back to the markets. So, the euro, I was saying, I kind of probed the market a little bit for interaction, and I can kind of see where the market's at. And in this case, I'm like, oh yeah, some stops are probably building above the 200-day, which I honestly do believe. I mean, that's a 618 retracement right here, 200-day moving average. You got the 50%, which we're probing up against right now, but more importantly, that downsloping trend line. And one of the comments that I made today about like the blog, if you hadn't read it yesterday, we have been in a volatility compression environment for so many years. I mean, you're talking literally like you look at this as for 2 years. Market's super complacent. I mean, September 2018, I guess more of a year, just this very low volatility environment. Market's about ready to explode if we can get out of this wedge. And my assumption is it's going to have something to do with this weekend. We get a Brexit passage. Boris Johnson would have to probably look for an extension. I mean, we got less than 2 weeks before the 31st. I can't imagine everything would be in order, but the pound would probably rip. What's good for the UK is going to be great for Europe. Is the theme that everybody's thinking, and plus, remember, everybody's short euros. So I think the risks of a euro explosion, once we break out, especially above the 200-day moving average, I think a risk for a euro explosion higher is quite high. What am I talking? Am I talking 120? No, but I think a move back into the 1-teens is very doable. Maybe 115, the big 38% retracement, 115.30. I think that's very doable. And the fact is, I tweeted a lot of that this morning because I was really just gauging sentiment, and the lack of retweets says a couple things. A, it's Friday, that a little bit less participation happens on Fridays, but also because I think that the market's like trying to fade these moves. Oh wow, the cable's moved 800 pips in the last 3 days. I'm gonna, or last week, I'm gonna start shorting some up here. There's no way this is gonna correct a little bit. We're gonna revert to the mean before the weekend. Yeah, well, I don't know. I don't know about that. Then you got the euro. Oh my God, euro never moves like 200 or 150 pips in a week, and we haven't done that in forever. So now that we've moved from 110 to 111.50, there's no way it's going to break out today. I'm going to go ahead and short it. That's the normal conventional thinking of a trader. And when it may work most of the time when you compress volatility, but when volatility breaks out, you don't want to be on the receiving end of that. And you've got this euro that's really, really probably pushing the limits of anybody who's short. I would assume that they're sweating a little here. So, and it's not just the euro. I mean, you look at like the Swissy. The Swissy's breaking down pretty aggressively here, and I'm not bearish the Swissy yet. Get below this trend line, and I'd really, be bearish Swissy. I've been kind of waiting to trade it on the short side, and Swissy is one of those instruments for me. I tend to miss it. It's like it moves, and I'm like, damn it, I knew that was going to happen. I didn't take advantage of it, and usually it's because I'm just so gun shy from the Swiss National Bank being on the wrong side of that, years ago, that I tend to be a little bit more gun shy with the Swissy plus the carry trade. Steve says I've got a lag here. Does anybody else have a lag? Anybody hearing me
Yeah,
lag a
just
little?
want to make sure that it's not me for
Steve.
some reason.
Yeah, you're clear. On
I'm
time.
clear.
Now you sound okay, but you
Oh, there
seem
are
to
a
be
few
breaking.
raising their
Yeah,
hand.
yeah, they confirm. Like there was
Maybe they're in Europe.
Which is crazy. I got a fiber connection to my house 2 weeks ago, and I actually think it's slower. Now,
I think it's overseas that they're getting the lag.
Are you on LAN or Wi-Fi at the moment?
Oh, I'm on LAN. I'm plugged right into the.
Okay,
modem.
so that can be it then. Okay.
Yeah, so
I'm in the cloud, Steve. Hey, you get off of my cloud.
Some people
Rolling
say
Stone.
no lag, but some people have heard it. So maybe it might be Zoom. It might be internet in my area. Who knows? But anyway, but what I was saying about the Swissy, it's breaking lower. I guess that's the point I should make. And obviously the cable is stronger, and these commodity currencies are absolutely getting bullish down here. They're reversing from some pretty key levels of support. So all in all, I think if you are short dollars, you need to be a little careful here. I think especially going into this weekend, can you take a pop shot at the market and say, well, I'm going to short the euro. There's no way Brexit can happen, or I'm going to short the cable. It's no way it's going to pass. I mean, Amanda just said in our chat room, for those of you that don't know, to get to the ForexAnalytix chat room, if you're a subscriber, not the light version, but a normal subscriber, you click right here, takes you to the chat room. I'm already logged in, so it won't let me do it right now because I'm right here. And there's a lot of us in there throughout the course of the day. I think there's 90 of us. Not bad for a Friday. Usually we're about 100, 110, somewhere in that neighborhood. But you guys are all on Jumbotron for those of you that are listening. But Amanda was in here earlier saying that the betting houses are 50-50, which is crazy. Usually they're pretty good and slanted one direction or the other. So if you decide to take a pop shot, hey guys, I'm gonna take you off here. If you decide to take a pop shot at the market, well, it's maybe more of a 50-50 thing, but just be careful. I mean, if you're short or long the dollar, and let's say Brexit does pass, and it does pass, I mean, the euro is going to, I would say the euro, I say, the cable is probably going to gap up quite a bit. I would say at least the 130, maybe even higher, and probably continue to rally from there. I don't think we're going to fill the gap. I think a lot of people are going to be forced to cover. And then the euro is obviously going to be trading at 200 moving average, maybe even higher than that. And I can actually make an argument that if let's say Brexit doesn't pass, then Boris Johnson's going to have to, try to go for a general election. Then he'll get elected because he's got a majority, and then he's going to have to go ask for an extension. So it's not over. The cable may come down, but what you might see with the euro is you might actually see the euro go up, because one of the currency pairs that have been beaten down so bad is the euro pound. So, the euro pound that has been absolutely crushed here, the euro pound could actually reverse and head back towards 88, and that could support the euro. So I look at the euro and it's like, I could actually make an argument for it going up in either situation, or at least not getting hit that bad if there's a no Brexit. Just some food for thought going this next weekend. Well, it's slow. And as far as the cable goes, I don't have any cable exposure. I think it's very risky to be long up here after such a big move, but it's equally as risky to be shorting something after such a strong move too. And you can, it's the case of it's a case of too strong to be shorted, too overbought to be a long. For me, sorry, I didn't mean to yawn.
John Rambo is thanking you for your Mexican peso call.
Well, Well, yeah, I mean, I'm underwater. I mean, hopefully you cherry picked it at the bottom. Yeah, my cost average is like 19.5, so I'm still in it. I love the support down here. Frankly, and I'm still long the dollar max, and frankly, if it reverses here, well, what would actually make it reverse is probably a Brexit doesn't pass, and it would strengthen.
How about risk off in S&Ps? Would that help it?
Well, that would definitely help. I mean, yeah, any type.
Okay.
When have you seen that? But yes, if you get some risk off, the dollar Mexican peso actually squeezed pretty aggressively yesterday in an Asian trade. You can see it squeeze the crap out of shorts, and that's just like a little like taste of what can happen.
Yeah.
In a risk off environment.
Okay.
The dollar Mexican peso is the current day carry trade.
Okay.
So you remember how popular those were back in the
Yeah.
2000s?
Yeah. Aussie yen was
Aussie yen, New Zealand yen. Yeah. The dollar max is that trade. And
okay.
but you see what
Back
happens
then, when
top.
actually those central banks had some interest rate to
their rates are
yeah.
at 8 and yen was at 0.
Yeah.
Well, same thing here with dollar max or euro max. Euro max
now
is,
in order for you to find carry, you need to go to exotics only, unfortunately.
well, yeah, you got anybody who right now who thinks that the Brexit deal is going to pass and equities are going past 3,000, shorting the dollar Mexican peso. I do think the risk reward is skewed down here. So I think the risk is that you can squeeze, but you have to obviously time it better than I did. So being long is very costly from a carry basis if you are holding it for an extended period of time. I frankly, if it doesn't break higher in the next couple of days, I'm talking like Monday, Tuesday, I'll probably just get out of it and look to revisit that later. But
thank you, Blake.
Yeah. Anyway, so we don't have Stelios today. Steve, how's it going this morning?
Good, mate.
It's
Good.
Friday,
How
right?
have you been? Yeah, finally. Yeah.
Can't complain about Fridays. Yeah, it's been an exceptionally long week for myself. My kids have had half days all week for tests and evaluations, and so that makes it extra long for me. I love my kids, but sometimes I just want them in school so I can get stuff done, and that wasn't the case this week. But anyway, so Steve, what are your thoughts here on Brexit going into the weekend? We don't have any data coming out, by the way. So
first of all, I think it's a good warning to tell everybody what we were discussing yesterday with Trent. Unfortunately, he was telling me that since they're introductory brokers, so they manage a lot of accounts for like thousands of clients. They told me that they had a huge amount of incidents that people were blowing up their accounts, being short the cable or pound pairs. And so the first thing I would want to say, which unfortunately we had been warning about it with Stelios a couple of weeks ago, is it's a big gamble trying to fade this type of a move, and we said it since we were a lot lower than here, because the market had to violently reprice what initially looked like almost impossible to happen. I mean, to get some type of a Brexit deal. And if people think that, okay, that's it, so there is no only downside from here because, okay, we moved 800 pips higher, they can find themselves being in the wrong side of the market as well, because if they indeed come up with a deal on time, or if they get they get an extension, but for what would seemingly look like ironing out details, cable might and the rest of the pound pairs might keep moving higher. So I think it's extremely dangerous to hold any position, during the weekend. And I think that, the safest thing to do is just, stay out of it unless you already have a position and you're, deep in the money.
Yeah, to establish a new cable position at this point in time just doesn't make a whole lot of sense to me. And I mean,
Yeah,
you
it's
know,
crazy.
there are people that love to roll the dice, and you know, you know, it's just sort of
Kind
what
of
it
a
Usually,
is.
those
sickness.
people, don't have longevity in the markets, unfortunately.
Yeah, this is a true statement. True statement. So, anyway, all right. Well, thank you for your thoughts. You know, a couple of the other things that I'd be kind of focused on here, you know, as far as market's concerned, you know, I want to leave you guys with some thoughts about dollar yen. Dollar yen. Oh man, I'm telling you, my trading view is just I think it's my connection. I'm really just like more irritated with it. Um, dollar yen is a really interesting animal because we had such a you know um, crazy move the last couple of weeks. Move higher here, the double top, right? This got everybody short. They obviously got squeezed and lost money. And then we have a continuation higher. Everybody trade the breakout long. And now here we are, you know, going the other direction, right? And and the risk is a break below 108.50 is going to, you know, kill long. And also, you know, we also have to note that, you know, we failed as we approach the 200-day moving average. And what I've been noting on the basic technical analysis for dollar yen is we've been knocking our head up against some key resistance here, big resistance zone. And so I think if you're long the dollar yen, you have to be really careful. I think this is a pain trade right now. I got asked by one of our traders yesterday. Simon actually popped in. He goes, "What's the pain trade?" And I'm like, frankly, it's, you know, anybody who's long the dollar yen. I mean, because obviously, you know, if you're short the pound and it, you know, we gap up over the weekend, you know, he was asking about yesterday, and I'm like, yeah, I mean, the dollar yen, you know, it's a false breakdown over here, possible false breakout over here. So if the dollar yen slumps back below 108.50, it's going to be a trade for a lot of people because a lot of people have bought not only the dollar yen, but, you know, a lot of these yen pairs, and so those could just, you know, turn south, especially on a, you know, unfavorable uh, event over the weekend with a Brexit, you know, denial, or, you know, no Brexit deal, so, or passage, whatever you want to call it in Parliament. So anyway, I thought I'd bring up the dollar yen because that is I think that that's something that could really hurt some traders that have been long this whole week, and, you know, break below 150 bearish here. So anyway, just some food for thought. I'm going to pass it over to you, Steve. I want to thank everybody for being, you know, with us throughout the course of this week. Remember, if you are trading and trading with a live account and you're not in the reimbursement program, so you don't get ForexAnalytix for free, or you want to possibly get it for free based on your trading, make sure you talk to Forest Park FX. All right, you know, you can send them an email or Skype them directly right here. And if you're in the United States and you don't qualify for the reimbursement program, at least get some cashback rebates.
Yeah, rebates.
Yeah, and so you know, make sure you talk to them, because, and that's who Steve happened to have a meeting with one of the principals there, Trent, yesterday, and that's what he was talking about some of the, you know, some of the accounts, you know, they had a lot of stress on the accounts over this last week moving down. He was talking to, you know, to them regarding that. That's who he was discussing, you know, and that's, you know, I hope you take that warning seriously, because we are going to gap this week. We're on Sunday. We are gapping. I don't know if we're going to gap higher or lower. I have no idea. There are going to be gaps in the market, so be a little bit careful. You've got some time, you know, for the next, you know, several hours to shore up some positions, to be, you know, to protect yourself. But if, especially with any pound exposure, any cable exposure, if you have GBP, anything, you know, euro pound, pound yen, you know, pound New Zealand, I don't care.
Prudence over valor. Don't be a hero.
Don't be a
Yep.
hero. Yeah, not this weekend.
Yep.
And like what
Exactly.
Steve said, unless you happen to be long the pound dollar from 124 or 126, you know, I mean, you could literally give back those gains. And if you're good with that, you're good with that. But I'm just saying that, you know, if you're long the pound dollar and, you know, the Brexit deal doesn't pass, you know, we could open up 200 pips lower. I mean, that's a reality. It's not a you know, that could actually happen. So anyway, all right, guys. Steve, I want to pass it over to you. Dale, thank you so much this week for being here and all the laughs and joys. And by the way, you know, you picked up your guitar, but you didn't play it, so I'm a little bummed out. Saying, all right,
buddy.
All right, guys, have a great one.
Have a good weekend, Blake.
All right, you too. Bye bye.
And Blake.
Yes, sir.
Blake, can you do me the favor and stick around with us for another 30 seconds and say something? I want to see if, while you were sharing the screen, if that was affecting your connection, if not, or not. By the way, a little testimonial. We have now dozens of clients that are with Forest Park FX. I'm among them, and we've had not even a single complaint. I mean, those guys are excellent. Excellent. So
my charts are still slow.
Yeah, but your voice now is coming through clear. Actually, when it wasn't coming before.
Yeah, you know.
So it is your connection then.
It might be my connection. I'm running a new security program on my computer, and that.
Kaspersky.
Yeah, and that
can't be it. I'm using it for decades, literally.
Yeah, I mean, you're slow half the time too. Right? So anyway, all right. Hey, thanks for trying. All right, talk to you guys soon. All right, have a great weekend. Bye-bye.
Bye.
So Steve, no guests today. You can wrap it whenever.
Okay. So bye everybody. I'm kidding. So by the way, since Blake was mentioning that, listen, you know, if I know that, you know, we get new traders as well, you know, joining the webinar. If somebody promised you, or, you know, if you want to go into trading because you think you can make like, you know, 100,000 in a year out of a $10,000 account, you know, do yourself a favor and keep the $10,000 and do something more useful with them. I'm saying that because these are the type of people that usually are of the mentality that they want to gamble, you know, on a binary event, hoping that they can make a killing out of it. But, you know, they might make a killing once, they might make a killing twice. If they get very lucky, they can make it, you know, 3 times, and then they lose everything. And unfortunately, we've seen that happen. And we have too many stories to tell. And one of the reasons, if not the main reason, that Blake decided initially to make ForexAnalytix is to, you know, help people that, you know, get fooled into believing that this, you know, this is an easy way to, you know, to make money, to realize that, no, it's not. It's, as everything else, you need to work for it. You need to put in the effort. You need to study. You need to be consistent. You need to approach it in all aspects like you
it's hard work. Money doesn't just fall into your account.
No, it doesn't. It doesn't. And most importantly, you know, you have to be a 1 in a million case to, you know, make, you know, a fortune out of $10,000, right? Just to be
so
clear
Gautam Batra is saying, so how much should I look to make over a year? Well, first of all, you're assuming you could make it. How about how much can you afford to lose? Is a good question of your 10K, and is that risk capital? Okay, that's risk capital, won't affect your lifestyle. And you're a proficient trader, or you're just learning how to trade?
I don't know if that is an indication. Perhaps I'm mistaken on that.
No, I was just gonna say, if you turn your 10 into 13 every year, you should be satisfied, because hedge fund guys do cartwheels over 25% a year.
Yeah, what I wanted to say, Dale, is that I consider a very important sign, a very good indication, if somebody can begin trading a demo account and actually being serious about it.
Yeah.
Because it is very easy to start trading a demo account and not be serious about it because it's not real money. So from my experience, it's a very good indication if you can actually trade a demo account like it's real money. In essence, think about it like that. It is going to be real money because if you don't take a demo account initially when you first start trading seriously, so you can actually have legitimate results about how you would be doing if you actually manage real money.
And there's actually a half measure too, Steve. Say for example, you were going to trade with you have money, you're going to trade with 25 grand, and with that, you know, you'd probably trade a standard lot. What you should do is trade micros, which isn't going to hurt you if you're wrong. Still take it seriously, but at least you have a little bit of skin in the game, which will teach you about the emotionalism of money. Because if you're losing $50 over and over again, that's not fun either.
Yeah, if you're good in following rules, then there are stakes in the game even for a demo account, and I'll explain why.
Okay.
Because if you persuade yourself that you will only allow yourself to start trading real money if you achieve some goals on your demo account, then in essence, you have every reason to want your demo account to do well. Because you've set a rule for yourself that, for example, I'm going to start trading real money only when I can successfully, trade on my demo account, let's say for X number of months and get, X result in the end. And by result, I don't mean like something, like a big return or whatever. I mean, for example, consistent. So consistency is what you want to see. So whenever you have drawdowns, those should be, manageable and limited. And whenever you do well, you should be doing better than when you don't do well. So, if you put some limits and you tell yourself that, only when I achieve X goals on my demo account, then I'm going to allow myself to start trading, then yes, you can start by trading, small positions. And if you can replicate what you were seeing in your demo account, then you can start trading, regular positions and, take it from there. But it has to be a slow process, because if it isn't, it's going to be a fast process. And guess what? Whenever it is a fast process for beginners, what kind of an outcome do we have, Dale? What's the fast outcome for beginners? They blow up their accounts.
Yeah, blowing up. Yeah.
Yeah. So yeah, that's the only fast progression you can have as a beginner.
Yeah, it takes time.
Yes.
Can't learn experience.
Exactly. Anyhow, so let's go to the charts, and we do have questions, and I'm more than happy to cover them all. So euro yen, pound yen, treasuries. Okay, let me gather them up as questions. I'm not going to mention those that Blake already covered. Euro yen again, pound yen again. Okay, they seem to be popular today. And metals. Okay, let's start from those, and you can keep the questions coming. So, as you see, the dollar remains under pressure. I just want to start from the DXY just to say that I'm still holding 2/3 of my short position. As I said, I wanted to see how we're going to close the day. And as you see, we closed the day below 97.70. For me, 97.70 was an important intermediate support zone. I like the fact that we sliced through it. I like the fact that we're seeing continuation today. Somebody can mention that we are about to retest the 200 daily moving average, but for me, it's more important that I see this break below 97.70. So I'm feeling pretty confident that we can at least make it to this ascending channels support, which means that, as you understand, my bias remains, long, like, the euro against the USD and the pound against the USD, although you have to take that with a pinch of salt, because obviously what's going to happen with the pound is going to be totally binary and, dependent on what's going to happen with, the voter or whatever else comes with it. We've also seen some first signs, and, I'm more careful with it, some first signs in the Aussie breaking above this triangle, which is definitely a bullish development, but you know, I would be a lot more careful here since, you know, we've seen a lot less from the Aussie and the Kiwi. You can see it here. To feel as comfortable as we would, for example, with the USD Swiss that was just breaking lower, with the Euro USD that has already broken above two important resistance areas, etc. For Kiwi, for example, you know, still below the 64.25 area. As long as it remains below it, you know, I would be very, very, you know, careful with, you know, trying to bottom pick it, because we've seen many attempts that have you know, failed again and again and again, time after time. Now, of course, somebody could say here, although it's not very beautiful, we were looking at a potential inverted head and shoulders formation, you know, a few days ago. But somebody could claim that we initially had a false break higher. I mean, that's not a claim, that's a reality. And perhaps we are now getting a breakout from an inverted head and shoulders formation. I have to tell you in advance, I don't like that much the symmetry here, right? Because you can see that the symmetry is not that good anymore for this to be an inverted head and shoulders formation. You can see it here. This is a 4-hour chart on the Kiwi. So I've seen a few people post this as an inverted head and shoulders formation, and I think it's not a, you know, it's far from being an ideal inverted head and shoulders formation. Of course, that doesn't mean that it can't work, but it means that, you know, that's not what you want to see from an inverted head and shoulders formation. So for me, going back to the daily 64.25 remains quite important. So I would want to see a breakout from there. But, you know, we're on our way there. So that might eventually happen as well, which means that I do see the potential for the dollar to keep on depreciating from here, right? And I do like it, and I didn't want to make a choice between pairs. That's why I chose, in this case, the DXY, although I did like the USD Swiss breaking lower from here. You can see it currently testing horizontal support area. I did like the USD Swiss breaking lower from here, and it did. I even like the Euro USD once it broke above this intermittent trend line resistance, and it came back to retest it, and now it's continuing higher. And as it seems, there is a very, very high probability that we're going to end the week above 111.10, which was the next area of resistance, and that would point to a continuation higher towards this longer term descending wedge. Okay, now of course Blake has a different trend line as well. If you draw that trend line from there to here and there, you'll see that we're currently on resistance. But you know, it depends on how you know which trend line you want to take into account. But I do think this is an important trend line. So 112.20 is where we find resistance in this case. And you know, I do like the reaction. And you know what else I like very much? I even see it here from you know, your questions. I even see it in the chat room. I even see it on Twitter. There are a lot of people still out there very, very unconvinced that the Euro USD can make a rally.
Yeah.
I mean, so many people that believe that, oh, Eurozone has so many problems, and you know, Euro is and should remain a sell on rallies under any kind of condition and
Great point,
circumstances.
Steve. Yeah, the dollar bullishness sentiment is very deeply ingrained. It's going to take
not only that,
the
Euro bearish sentiment as well, specifically Euro, right?
Yeah. The parity guys won't give up, will they?
No. And I remember
not till it's 150.
I fought the parity theories every single time during the past few years, saying that in order for the Euro to go to parity, there has to be a big mess unfolding, and we're not even close to seeing something like that at the moment. At the same time,
what will convince them, Steve?
Yeah, an upcoming rally.
Well, you know, the fundamental that they'll finally get, and it probably happens, you know, mid-stage in the advance, is that Germany is going to do something fiscally to stimulate, and people aren't counting on that.
That's not going to be easy to fly in Germany, Coach.
Really?
Yeah, no, that's not going to be easy. I'm not saying it can't happen. I'm saying that, you know, we've been indoctrinated, we've been brainwashed by being in constant contact with central bankers and all the financial community to consider normal what Germans are smart enough to know it isn't.
Well, it's not monetary easing to do something fiscally. It affects the budget, but it's not the same as counting on the ECB. It's different.
Let me ask you something.
Where does it come from?
What has been the solution for every country that has blown up the fiscal part?
Yes, of course, the monetary.
So you see how much they are connected with each other, right? Because once fiscal irresponsibility takes control, then it is very easy to transition to the next step, which is what? Oh, you know, central banks, you need to save us here because, you know, our budget is a mess. Our deficit is huge and increasing. And, you know, the only way we can afford pain in the short term, because unfortunately, you know, if I've said that in the past.
I wonder what Lagarde is thinking.
If
we may have our opinion. I wonder what she's thinking.
Yeah, but I don't really care about what she's thinking. I mean, I care as a trader.
You don't like her because she has gray hair.
No, I have no problem with her as a, you know, as a person. I mean, that's, you know, my. I mean, I have no problem.
Voulez-vous coucher avec moi?
Ce soir.
Christine Lagarde.
Yeah.
I'd be a great trader if I knew her, I think.
Yeah. So, you know, and coming back to the Euro conversation, for some reason, a lot of people keep ignoring the elephant in the room. And the elephant in the room is that the US economy is in a horrible, horrible mess. And people that just look at the surface, they don't realize that. But, you know, we've gone through this conversation before. The US runs by far the biggest deficit among all developed countries, by far. I mean, nothing comes close to it.
Groundhog Day.
And there is a chance that we're going to have a Democrat socialist president coming in a year from now. So, you know, whatever that means about the deficit and the budget once again. So, because, you know, from what I've heard of them speaking, they don't even try anymore to pretend that, you know, they care about it. I mean, they are proponents of modern monetary theory. By the way, modern monetary theory has nothing modern. And
yeah, the Romans did it.
Yeah, it's been tried in the past, and it has led to the same results every single time.
That's right, lead. They start putting lead in their silver coins.
It's Banana Republic monetary policy 101. I hate to say it, but that's exactly what it is.
Well, let me be honest with you.
Yeah, go ahead.
Just for a change of pace. I'm just kidding.
Yes. Yeah, I know you are. Now, we have a question about the euro yen, so and the pound yen and the metal. So let's take those one at a time. So euro yen. Euro yen has had a nice recovery, as you can see here. And I think what's going to determine the nature of this rebound is what happens from here. Because usually when you draw, you know, a channel to the rebound, you can find out if this move was corrective or not by just watching what's going to happen here at the resistance. Because if you see an acceleration higher, so you see a price action that penetrates through this channel like it never was there, so the market actually, you know, completely disregards this channel, that shows you that something bigger is brewing here. In which case you can be more or less certain that you should be buying the dips from that point on. If you do get rejected from here though, you know, and we breached through what would then be naturally the first area of support. It was resistance. It will now be support. That's at 119.90, 120 roughly. Then, you know, you have to be quite careful because this could have been just a correction higher. So bottom line, Euro Yen is at key resistance at the moment, and that's what I'm waiting so I can get you know, a better idea of what's happening. I am constructive the euro, cautiously constructive the euro is the term I should use. But on the other hand, as I indicated before, it's not that I have much confidence in what's going to happen with the USD yen, because don't forget that the euro yen, you know, involves both those currencies. So USD yen also looks constructive, but only as long as we stay above 108.50. I will have to agree with that. So, you know, if it holds that level, that's probably going to be a nice indication that Euro Yen is going to continue higher. So watch USD Yen at 108.50 and what's going to do from there. And as I said, watch this ascending channel in the Euro Yen. That's going to give you more information. Now, having to do with the Pound Yen, there it is. So, Pound Yen. Pound Yen at the 61.8% fib of this last move lower, and equality target, so first leg higher, equal to the second leg higher, was just a little bit lower. So you can never be perfect with those. So I like the fact that those two resistances are close to each other, and we've seen for the time being, and it's quite likely that we are going to hold that to end the week. Obviously, you know, if I told you you should be buying it or selling it here ahead of the vote that we have on Saturday, you know, it would be foolish, right? So I can tell you one thing. Pound Yen is currently on a resistance. 136, 135.70, 136 should be support on the way down if we get rejected from here. And assuming, because of course you cannot chase it to the long side, especially ahead of the vote, but assuming that you get an initial bearish reaction, then in my opinion, what's going to matter to see what's happening from here is going to be what's going to happen from that zone. So if you get lucky and we get a pullback to 135.70, 136, and we seem to be holding there, I think it will be worth attempting to buy it. Now, on the other hand, I would have told you under normal circumstances, but that if you like it to the short side, it's worth trying to be short exactly here. But as I said, not ahead of a binary event like the vote, okay? Because it can easily just, you know, gap up and, you know, open from 139. It can open at, I don't know, 143. Who knows? 142, 141. Who knows? You don't want to be on the wrong side of that. So bottom line, nothing to do ahead of the weekend. But if we get a pullback and we hold 135.70, 136, not a bad idea to attempt being long. Okay, so that's what I think about it. Now,
all right, buddy.
What?
Okay, buddy.
Okay, about what?
Okay, about it ain't nothing but a drawdown, not a margin call. It ain't nothing but a drawdown, not a margin call. But I'm not worried because I still think it will fall. That's all.
Mauro says, I also think that the Germans have constitutional limitations on the kind of fiscal measures that they can take because of what happened in the Weimar Republic.
Oh, they forgot about it. The wheelbarrows in the museum.
And unfortunately, that is no guarantee for anything, because if I go back in history and tell you how many constitutional limitations the US had having to do with monetary policy, with fiscal policy, etc., and how many times these have been violated, you will just realize that the only thing that can protect people is the actual understanding of citizens about how prudent they should be. So what the Germans have going for them is that they're smart people, they're conservative people having to do, I mean, with, you know, fiscal issues. So it isn't that easy to find a populist politician in charge, simply because the people that vote are a lot more mature than the people in other places, and that's an honest truth. Give me a second, because one of my cats is going bananas. Wait.
Okay.
Oh. she wants to go to the kitchen. Oh,
live TV, isn't it great?
Yeah,
man?
live TV. Yeah. Yeah, so, you know, at the end of the day, what can protect you from irresponsible politicians is responsible electorate. That's it. As simple as that. Responsible voters, right?
Yeah.
That's it. Because, you know, if voters want to believe in
fairy tales,
in fairy tales and empty promises, then eventually you're going to get the wrong kind
nightmares.
of people.
From fairy tales to nightmares.
Running the country. Yeah. That's
anyway,
reality.
you want to leave it on that positive note that we're all headed towards the twilight zone. And Rod Serling could not have written this economic script that we're trading right now, brother. And
there is no question about something, and you know, I could bet my life in the blink of an eye about it. Future economists are going to be, are going to be talking about the era that we're currently going through as a very stupid period in humanity and our understanding, you know, how economies work. So I have no doubt about that. That's going to go.
I hope they don't have to use carrier pigeons to spread their gospel. So
no, I'm not, I'm not.
You know what I mean? Mad Max. It could turn into a Mad Max world. You know, an economic type.
You know, I'm not the prepper type of guy.
No,
So
are you kidding me? Roughing it for me is being in an RV. You know. Yeah. Having that, so I'm not exactly a survivalist type either. So the spoiled guppy generation, I don't think we're, you know, going to be able to go out there and hack it. So great week, Steve. Great dollar call. I think everyone should have had a good week. You know, I don't remember us talking about being constructive the dollar for the last 2 or 3 weeks now. So we're doing our job. We're doing our job.
The move higher in the dollar, as we kept saying, was slow. It completely lacked momentum. And, you know, it was the wrong risk-reward ratio to be long. Yeah. I mean, it made sense because you were following the trend. So I had no argument against people that wanted to be long the dollar. I still have no argument if we're talking about medium-term to long-term positions, because the uptrend in the dollar is still not violated, right? It's still ongoing. Because we still remain in that, you know, ascending channel we've shown, so we still have a series of higher lows. But, you know, as with the Euro USD, you know, you were pushing your luck. And there is a decent chance, especially knowing how bad the market is positioned, that this start lowering the dollar can really escalate to something, you know, it might have the snowball effect. Yeah. It's still early to say so, but don't disregard that possibility. That's what I'm saying.
Okay, buddy. Well, I hope you and your family have a great weekend.
You too, Coach.
And I know you'll.
And everybody else.
I hope don't work all weekend, Steve. Let me coach you. I know, you know, you're a workaholic, kind of like I used to be when I was a young man like you. And definitely get out there and smell the roses. You know why? Because money comes and goes, Steve. Time is gone forever. Make it count. And go play with Jason and his 100 cards, toy cards that you got. All right. And okay, that goes for everyone else out there. You know, don't sit in front of your computer screen all weekend. It's fall, it's beautiful. And tell the people you care about that you do. They're not mind readers. And with that being said, don't just count your pips or anything physical. Count your blessings. And we're going to be here to kill it with you guys again next week. So thank you, everyone who's become part of our trading family. Good hunting the rest of the day. Remember, binary event over the weekend, as Blake said. Don't be a hero. I guarantee you the markets will be here after Brexit, the Brexit announcement on the deal. Make sure your equity is. So that's it, everyone. Adios. And we'll see everyone on Monday. Can you end the meeting for me, Steve?
Oh, yeah.
Yeah.
Give me a
You too,
second.
Monica, Guatem, Demetris. Have a great weekend, Warriors. Adios.
Bye-bye, Coach.
Take it easy, Steve. S&P is selling off. See you, Rick, Monica, Guatem, Dimitri. Hey, Scott. Who wants to go home long S&Ps this weekend? Well, we're going to find out. Okay. Adios.